being an EM guy historically, and I mean having some leverage to cannabis, are you looking at Europe at all right now, or you including that in part of your investment thesis, or you still think it's too early?
Hey everyone, welcome to our latest Trade of Black podcast. I am your host, Shad Dales, as we continue this journey this past week of cannabis. This is the most popular this industry has been this past week. Lots of positive attention, a lot of interest flowing back into the industry as we continue, as I said, with big name guests as we bring in, once again, he's a CNBC on-air host of Fast Money and the Chief Investment Officer of Seymour Asset Management and manager of the Cannabis ETF, CNBS. Tim Seymour, good to see you, sir. How are things?
Hey, Shad. Hey, Anthony. It's great to be here. And yeah, we're all kind of like catching our breath just when you're trying to enjoy that last week of summer with your kids.
I know.
Somebody drops a headline we're all happy to see. So it's been a crazy few days, but that's been the story of this industry for the 7 or 8 years I've been enjoying it.
Yeah.
And it is. It's wild. So excited to talk about whatever you guys want to do today.
Yeah, don't look now, but the macro level, markets look pretty bleak. Cannabis is kind of leading the charge. There's a lot of positive momentum. But what was your reaction a little bit a week and a half ago when the HHS recommended the DEA that cannabis should be rescheduled? This is stuff that we've been following this industry that should have been announced for quite some time ago. But nevertheless, it was announced. We will wait to see what the DEA has to say. And since then, we've had a lot of euphoria back into the industry, which is great to see.
Well, what's different about this news is it wasn't speculation. I mean, there was an actual letter that was sent that was documented. I realized that when you're talking about safe banking and you're talking about legislation, there's a process that even the concept that you're going to have, and we'll talk about safe, I'm sure, as well, but it's like second and third derivative stuff. You know, you have a concept, you have the ability, like, oh yeah, I think they're going to have this conversation, and then out of that conversation, we're going to try to get some votes. That's a third derivative conversation. This is, at worst, a second derivative conversation. What we all know is that there are elements of what was announced that the Biden administration controls.
Right.
These are appointees by Joe Biden. These are people in a political cycle that want to deliver. Now, the element of what I think is less tangible and specific around what was said, but the reality is when HHS comes forward and says FDA has looked at the science of cannabis and said that this is something that they are recommending a rescheduling, and here you go, DEA, you do with what you need to do. FDA, I'm going to also tell you somewhere in today's conversation that I'm really worried about the FDA. But at least what the FDA came forward with is credibility for the sector.
Right.
Credibility that I think somewhere in there actually impacts what those guys down on the Hill are going to do and think about. So rescheduling gives a lot of red states and representatives the ability to at least come in off the ledge. That either way, they weren't going to come in off of if not given the proper bridge. That headline was very important because also it really does tie back to where we started last fall when the Biden administration, granted in a very inconsistent fashion, in a very frustrating fashion, began building up the tempo around what they were backing in cannabis. And it started with Joe Biden talking about criminal justice reform, pardons, et cetera. And so when they linked this back to a time when, in fact, exactly what the administration did do was say to the FDA, to the HHS, hey, go ahead and do your work on this and come back with a recommendation. And here's the recommendation.
Yeah.
So it makes sense. Whereas there's a lot of pom-poms being waved on omnibus bills at the end of 2022.
Yeah.
That, look, it's easy to be Monday morning quarterback, and I'll let everybody who listens to you guys and watches CNBC and people that are involved in the industry, there's a level of balance that you need to have,
of course,
about what has happened. And so,
well, you said the FDA concerns you a bit right off the top there. What do you mean by that?
Look, everything that I had heard about from guys that are in DC in lobby capacity and folks that were dead on and never even, they were unwavering about saying no safe banking. It's not happening. How much you guys are talking about. Those same guys have also said that what they understand is the only thing that's going to be palatable is ultimately for THC to come in behind CBD through the FDA. And that's going to be how this is going to get regulated. And look at the FDA. How about that farm bill? I mean, where's CBD right now?
It's a mess.
Where is it in terms of it being a proper ingredient in various forms of nutraceutical aids? No, it's a standalone. It's this, it's that. You can put it in back cream that relieves muscle aches, but you can't claim it does anything. CBD has not been handled well by the FDA. That's what I'm talking about. The more government agencies we get involved here, the more complex this takes, and the farther down the road it all takes to actually see it hit the balance sheets and the income statements of the companies that everybody's rallying up 80 to 120%. So that's what I mean by it. It's at the same time it's the FDA, and I don't whether you're a major consumer of cannabis from a medical perspective or from an adult perspective, or whether you're a casual observer, look, the reality is that this should be Schedule 3 a long time ago. And putting it into, and just like some of the misperceptions of this, and I'll give you an example from CNBC, because really, really smart people in the medical space, including the new healthcare reporter we have on air, obviously I think she may be more broadly across the NBC Universal platform. We had a healthcare reporter who's been there forever, who's really talented and went on to another network, and good for her. But we had a woman on last night talking, we were talking more about the weight loss drugs and the impact there and what's going on with Eli Lilly. And we all know that that's been its own extraordinary story. But there was a reference in there to other drugs that are out there, and also drugs where there's prone for abuse. And this woman, who's a PhD and who's a medical reporter, said something along the lines of reference marijuana, abuse of marijuana. I obviously take that a little personally, being in the industry and having spent a lot of time learning about the science. But this is not a drug where you're seeing drug abuse. You could see behavioral problems with anything, with caffeine, with nicotine, but this is not a drug that's prone to abuse. And that's part of what I think is really just matter of fact. And that's why the FDA coming forward here and making that recommendation, I think, is going to wake up people who just are clueless and ignorant, and even people that are really smart and should know a lot about the industry. And that's why I think that the knock-on effects for this kind of news. This just gets into valuations and where people are willing to price stuff, and multiples things should trade at, not just because they're growing at this level, but also discount factors, risk factors. That's why I think this was a really, really important time. But again, getting back to the last 7 days, what it's shown is that a lot of hard work, a lot of effort, and frankly, a lot of progress that's been made in the cannabis industry legislatively.
Has this woken up? Has this woken up any of the institutional guys that you're talking to in New York, or any of the guys that we've said have been on the sidelines, like with the wall? Like, there is some institutional capital that's sitting on the sidelines waiting for stuff. I mean, are their ears at least perked now? Because I mean,
I think they're perked. I think we still need some liquid plumber and some drain oil to clean out these pipes, though, and it doesn't change that. This doesn't change the ability of institutions to actually own it and trade it and custodize it, and that's a huge problem. And frankly, it's still just too much of a hassle for some people. Right. So in a world where I think you guys, I've said this here, I've certainly said it in other places. To me, the defining moments as an emerging markets investor, when I was investing in places like Brazil or Russia. I lived in Russia for a year and a half back in the late 90s, and it's really sad what's going on there. It was a time when it was just another evolving, growing market that I was really excited to be in the middle of. But I was sitting on the investment banking side, and we were doing deals, and I was also I was a trader, and one of the things that was the most powerful dynamic for as an EM guy is not when Fidelity or State Street or Putnam's emerging markets manager or their small cap manager wanted to buy a Russian oil company. It's when Fidelity's global resources or State Street's global resources analysts wanted to buy a Russian oil company and drop it in a portfolio next to Exxon or BP a Royal Dutch Shell, that's when the sector had made it.
Okay.
That's when EM, even though it was on a subsector basis, it's the same thing with cannabis. People, you can be involved in the cannabis industry as a generalist, and there are. Effectively, what I do, managing an ETF, I own vertically integrated companies, I own ancillary, I own banks, I own this, I own that. And the EM, let's face it, what were the most obvious trades for big global investors to get involved in? It was the resource companies and the guys that wanted to buy a steel mill in India or something like that. So back to what it means for cannabis. Cannabis is going nowhere until you can get those big institutional, and I mean global funds, where their CPG fund manager wants to buy cannabis in the growth part of what they do, or to have it sit next to, dare I say, a Diageo or a Pepsi or something.
What do they need to see then? Like, does rescheduling change everything, or that's just
No, it doesn't change everything, but it helps. But I mean, first of all, they need to be able to own it. And so, this through talking to other fund managers, this talking to even some of the companies that are very aware of how their shares trade or where they don't trade. I just think a lot of guys can't even bother to own it. It's too much brain damage. And so rescheduling doesn't do anything for that.
Wow.
Some of the things that are really bullish, and Jason Wild's a friend of mine, and TerrAscend's listing on, and I'm long TerrAscend, so disclaimer. But I mean, like, their listing on the Toronto is really important because, and I can just tell you this as a fund manager in my ETF, I'm allowed to own TerrAscend on the Toronto without having to own it in a U.S. swap form. My ETF owns mostly U.S. because that's really the most exciting stuff right now. And probably for the foreseeable, but I used to have to own TerrAscend on swap. Now I can own it outright in Toronto. Not only that's great for me, they've given me access. So they've given other portfolio managers access. I have a heavy duty compliance team at Amplify that makes sure that we're not stepping outside of what we're supposed to be doing, especially with running a US 40 Act ETF. So that's the stuff that's really important. That's the stuff that I think a handful of other guys are about to fall through. By the way, for those guys that are listening in Toronto, when the exchanges are really fully open in the U.S. and we can debate what's going to be the actual green light for them, or whether it's going to be gray areas that allow them to get comfortable. But you can be sure that the guys that are trading in Toronto on the TSX are going to be first to be listed on the New York.
Yeah, I had a TerrAscend DRS sitting at the top drawer of my desk for years, since they acquired Gage. And as soon as Jason made the announcement, I called TD Ameritrade, and I've had so much brain damage over the years calling them, being like, "Will you accept it? Will you accept this?" Call them, give them the ticker. They go, "Yeah, here's the form. Well, we accept the DRS. Pershing will clear it. You're all systems go." I was like, "Thank God." I was like, "This is this is going to work."
That's more what's going to help the institutions, I think.
Yeah.
And I don't know. We can begin to speculate what safe banking will mean. Rescheduling doesn't really change it.
Yeah.
Obviously, what we know, and one of the reasons why you see the top 5 to 10 companies in the space now, that we'll call them the legacy players. I guess that's the wrong term, because they're actually the legacy industry in cannabis are the folks that are the illicit market.
Yeah.
And they're the bad guy right now. Sorry. But they are. And so the existing players, not the legacy players, the existing legal, vertically integrated players in the U.S. Are the ones that actually really benefit from this.
Yeah.
Not
being an EM
So-
guy historically, and I mean having some leverage to cannabis. Are you looking at Europe at all right now, or you including that in part of your investment thesis? Or you still think it's too early over there?
I don't think it's too early, but I think it's still pretty limited considering where we have opportunities. And I think it's ultimately going to be about the marginal dollar allocation, where you think you can get the greatest return. We have obviously had some real progress in Germany and across the continent in the last 3 months after some real disappointments. I have some friends that are running businesses in Europe, especially I have friends that are running businesses that are CBD first, but THC ready to roll. And that's a case where I think in Europe it's going to be a lot easier for those folks to actually use that distribution and that integration into the pharma network in Germany, for example, for the distribution to actually be able to go from CBD into THC. But their CBD business right now is very successful and profitable, unlike the ones here.
Yeah.
So look, this is a global industry. CNBS is not, it's not U.S., the U.S. mob, the gang, whatever the hell they're calling it. I mean, this is
MSO gang.
we all know why these little, uprisings and where they've come from, why there's emotion around certain issues. You guys sit in Canada, Canada was revolutionary and early, and obviously it's a market that has a limited size.
Yeah.
We don't need to go through it.
Yeah.
The point is that I'm here to invest wherever the best opportunities are.
Yeah.
And I actually have a good sized position in Tilray, not because I think they're like sneaking their way through the beverage space to own, to suddenly be a THC player that Irwin Simon's actually trying to like pull the wool over people's eyes. I actually just think they were really smart to diversify into profitable assets that were accretive investments and that they have more cash on their balance sheet than anybody. And blah, blah, blah. So like, do I want to be invested in Tilray? Yeah, not because I think their MedBen acquisition is necessarily like the ticket to them suddenly dominating the U.S. cannabis world. Tilray's got a really interesting business on distribution in Europe, right? So I feel like I have some exposure right there. But to ask about the global cannabis world, I think look, a lot of what's happening right now will be really bullish in the shorter term for what's going on. Be clear. I mean, an FDA process in the U.S. is how the pharma around the world follows suit. Yep. So I'm not saying, again, we don't know how the news of the last week is going to evolve in the U.S. for cannabis, but it's very good for the global trade.
Yeah, it's a big retail play right now. A lot of misconceptions as we take off the pom-poms. But, if you were looking at this industry and really walking before you run, I think the biggest misconception right now is that rescheduling is just going to change everything. And what I'm kind of hearing right now is it doesn't change a lot. So in a perfect world, what does that picture look like to like have the industry come in from an institutional perspective? And like, do we need SAFE to pass? Do we need federal legalization? Like, what is it? We need uplistings. We need all of it, I assume.
Well, some of the institutional players that have backed out of the industry, if they were still in the industry, I don't think they made a decision that was based upon suddenly something changing for the negative. I mean, it's pretty ironic, right? That and it's how it works in markets and in trading. That like the moment the last broker had closed their cannabis research coverage, we get this kind of a move.
Right.
Whether it's Cantor, whether it's BTIG, whether it's whoever. Actually, that may not be fair to BTIG, but Cowan, who was the early ringleader, called them Barnum Bailey. Yeah, I did, and and suddenly they merged with a Canadian bank. It's a great irony. Suddenly, no longer doing that, and so. I think there's a lot of ingredients. We've always said we want to see points being put up on the board. What's gone on in the last week, either way, points have been put up on the board. Yeah. Toronto listing or points up on the board. What may or may not be happening with the Senate Banking Committee, we're all reading the same stuff. The biggest issue also may just be the slow and steady, march of state by state adding cannabis programs, right? So adult markets that are slowly in red states that are taking shape or joining the ones that are already there. So I think it's all of these ingredients. And you asked me, where you're ultimately asking me, I think, Chad, is where can the industry trade?
Yeah.
Without institutional capital, right now, even after this move, you're talking about an industry that trades around 1.5 times sales, maybe 2 times. Yeah. And we're talking about sales of the sales we can count, not the sales that don't exist.
Right.
So remember, one of the biggest headwinds for global investors who might, all other things be equal, be in the industry if they had the access points and the pipes were flowing and this and that was, I don't even know what multiple to put on this industry. I don't even really know. It's not even like, they're not even like about like, hey, safe banking this, hey, safe banking that. They're like, hey, I have no idea what the real margins are on this industry. I believe they should be higher than almost any other CPG, but I really, that's what I was hearing more in the early part of 22. Not that I were really disappointed about safe. By early 23, it was a different story altogether. And frankly, we all know where capital markets were, where markets overall were, the disappointments that kept coming, each ill-advised enthusiasm and statements about safe about to happen took the industry that much lower.
Yeah.
I'll say a couple of things also about the price action. If you look at the charts today, most of these stocks have rallied back to exactly where they were in late summer 22.
Yeah.
Right on the eve. So after cannabis markets had fallen with markets on inflation, on rising interest rates, on less capital markets access, et cetera, illicit markets going wild. But cannabis markets were kind of basing as you got into September, and then you had the Biden administration start to sprinkle some of their decrim pixie dust, and then you really built up into a frenzy, as we know, into through November, and then that we all remember where we were, kind of like that weekend where you got the articles from Politico and Marijuana Moment, whoever you're listening to, that DOJ was on board.
Yeah.
But that period before that ascent was where these look at the charts; they're all there, and it also explains a little bit about maybe or maybe not the limitations of where this move will go. I think we need to get a little more follow through. Frankly, it's been a pretty robust. It's been an extremely robust few days. The last 2 days are what's interesting. And one of the things as an active ETF I like to be able to do is to kind of trade the excesses, right? It's a pretty inefficient market. And this is one of these moments. It's like, all right, every other time I should have been fading this move. And so what do I do here? And actually yesterday, my biggest position, and I'm looking at my positions. I mean, I have about a 12% position in GTI.
Okay.
And it was 100 basis points higher the day before.
Yeah.
So I sold a little bit yesterday. I put some levels in there above the market, which is the best way to trade on these kinds of days. And I sold probably, I raised 3% of cash yesterday.
Yep.
So now I have 5% cash in my portfolio. And look, one of the things that an active ETF can do, and we can't do a lot, frankly, and I'm not sure my investors want me to do a lot, right? They want to be exposed to good companies and they want to be in the space. One of the things you learn in the hedge fund space is you don't usually get punished by your investors. People don't put in redemption notices when the market goes down and you're doing poorly.
Yeah.
And I mean, the market's doing poorly. Hopefully as a manager, you're outperforming or whatever. But where you get fired as a manager is when markets go up and you miss the move.
Yeah.
Every single time. And I know this from hopefully not personal experience. I just mean this, as an EM guy, it was one thing to go through 2008 and 2009, but that rally back was really where our investors expected us to be. So back to, I don't want to get too cute in here.
So managers get fired when they miss the next trend up every single time.
Totally. You don't get fired on the way. You don't get fired for not doing, look, again, there's two different types of performance on a drawdown. There's the market's performance. What's the market doing? What's your asset class doing? If cannabis is down 80% and you're down 80%, whatever. If cannabis is down 8%, you're down 85%, your investors are probably going to be like, all right, you underperformed the market a little bit. We don't love that, But my guess is it's really more, cannabis goes down 80% and then rallies, 50%. And if you rally 5 or 10, I think people are not going to be happy.
I mean, I think that's where the psychology plays in here because, this rally's been immense. And I was pounding the table on Air Wellness before this. I loaded the boat at like an average of 72 cents on Air Wellness. So, I'm sitting pretty well right now. But it's like psychologically, it's like, I'd like to sell it. I'd like to sell it and take some exposure off. But at the same time, with these aggressive moves, it's like, I can't get caught offside because the headline risk right now is straight to the upside. There's really not a lot of headline risk with implied downside. So it's like, are people really going to, aside from you being an institutional active manager, like on the retail side, like are people really going to pare down exposure on these aggressive moves and use risk management, which you'd argue they should. But if Sherrod Brown or Chuck Schumer comes out tomorrow and says, guys, 2 weeks from now, there's going to be a vote on SAFE. then I mean, I think we're going to see what we saw the last 6 days ahead of
Yeah,
us.
I think we will. And as much as my background as a long short equity hedge fund manager in a volatile asset classes, it tells me that in the most efficient markets, you know, I mean, long short equity is like blood money. I mean, you know, every single day there's something to be doing, and hopefully, especially, and a lot of it is really, it's intended to be almost absolute return approach. So to be clear, I run a long only ETF in a space where people are making a thematic call. So really, my number one job is to find the companies that I think are real companies and executing during this time. That I definitely want to be able to make some adjustments when market's running and when it's not. And that's it. And I kind of want to be where the market is today. And, it's kind of a cliche. I want to be where the market is tomorrow. In fact, if you listen to I do a weekly podcast for CNBC, and that's part of like my opening 30-second intro. It's kind of like, we endeavor to have the investors position where we believe the cannabis markets are today, but also where we believe they're going tomorrow. And so that's tricky because on some level, think about the cannabis markets over the last 3 or 4 years, where ancillary and some non-plant touching have been places that seemed like natural places to want to be exposed. And either way, if you're running a cannabis ETF, you're supposed to kind of give somebody a little bit of all of that.
I mean, right now, ancillary and the picks and shovels are lagging the rally.
Really lagged
hard right now.
Really lagged. Yeah. And it's interesting because when on Wednesday, I'll let's see what I got here. I've got a 58 basis point, so less than 1% position, almost 0.5% position in Hydrofarm.
Okay.
Hydrofarm, which was a deal when it came, brought by JP Morgan, was a home run and a half. And seemingly it's it's a real business. These are guys that I think. Obviously, on some level, if 280E is rescinded, if we're rescheduled, on some level, the ancillary guys should do better. They're going to be in a position to actually be beneficiaries of the greater free cash flow from operations. But Hydrofarm's done nothing. Hydrofarm's been up about 18%. I remember I was like, all right, well, let me add a little bit because I want to look at the underperformers. Hydrofarm's underperformed. And is this one also that because of kind of at one point it had a little bit of an institutional ownership because of JP Morgan, like this might be one that really has a disproportionate move. And I remember putting in an order and everything was gapping higher. And there was some stuff where I just said, lift my limits and get me filled. And with Hydrofarm, I just said, I'm not chasing this.
Yeah.
I'm not chasing this.
So I remember when Hydrofarm came out, that and Ugrow went nuts.
Yep.
Both of those stocks went crazy. When they came out.
Tim, how do you see the industry performing then this fall? Like this, there's just too many unknowns as far as like some of the announcements that could happen. So it's tough to, I guess, predict the future. But how are you playing this over the next month, 2 months, 3 months?
Well, the good news I'll say, first of all, is that I think the cannabis industry has kind of de-risked itself relative to global markets, and we're going to talk tonight on Fast Money about a lot of things that are going on out there, including, Apple's down 3% for a couple of different reasons. Some just because, frankly, I just think you've had a discretionary pull forward that Apple was the greatest beneficiary of. There's the China news that I think is a big, big, big deal for Apple that people don't talk about. But global markets, after the S&P rallied 20% off the SVB bottom, there's problems out there. And you've also seen major repositioning. What we've seen cannabis do for the last 3 years almost, with the exception of its correlation to high multiple tech and, XLK, but really like ARC, people charted those correlations too. For the most part, cannabis has been so uncorrelated, and that's probably good news for cannabis this fall. All right, that's the first thing. I think cannabis is kind of de-risked. I think the comps get easier. If you look at both some of the comps that were related to some of the inflation dynamics and some of the headwinds that the industry hit, especially in some of the states that started to finally turn it a little bit. I think back to one of the first topics we hit today is, hey, Tim, what are you seeing from institutions in New York, and what are people thinking? And look, the interest factor is certainly significantly higher. I mean, this industry was left for dead. Yeah. And I do think that people are paying attention.
Yeah.
So, I mean, I think what's going to happen this fall, the things that we're talking about are really important. The follow through from the administration is really important. It is notable that the Biden administration said on Friday, 2 days after the HHS letter to the DEA, that, hey, we've always supported cannabis, which they haven't. They haven't always supported cannabis. Yeah. They've been really inconsistent, but they took the opportunity to wave the flag and say, we're in this to really bring about change. And I think that bodes well. Anybody that's been investing here knows that investing, unfortunately, your investment on your investment committee is the government, and it's really tough to count on that. But look, there are companies that are executing. I mean, one of the reasons why Green Thumb is done as well as it has is because I think there is a level of execution and not chasing, and even in an asset heavy industry, have chosen not to have to be everywhere and be everything to everybody. Some of the restructuring or the mini restructurings that have gone on, and so TerrAscend, I wouldn't call it restructuring. They obviously had the benefit of, frankly, a strategic investment partner. Allowed them to monetize a lot of debt. They had a couple. They were already kind of restructuring Pennsylvania. They were adding Maryland assets. New Jersey's always been kicking it, and Michigan, after a really difficult period, is stabilized. So that's where the fundamentals of the industry are also coming through. Yeah. Let's be clear. This is a bottom-up story as much as it is a top-down.
A lot of people long on TerrAscend, that's for sure.
Yeah,
we were actually down with him at the day that they launched on the uplisted on the TSX. Big day to say the least, but
exciting stuff.
I don't think people I think some people understand it was a big announcement, but just the amount of time, like this wasn't something that Jason began working on 6 months prior. This was 5-6 years in the making, but kudos to him and the opportunities obviously it brings outside of just retail moving forward and the advantages he has over obviously other multi-state operators. But
do you see the health? Do you see the health of the consumer playing into this at all? Because I mean, like, I watch CNBC religiously, and they have a tendency to be like, all right, auto loan debt, all-time high. Credit card debt, all-time high. Rent, all-time high. But then they bring people out that says the consumer's healthy. The consumer's in good shape. And I'm like, you just gave an argument that the consumer is probably on a collision course with being in not very good shape. And obviously cannabis can probably be defined as discretionary income to the highest degree.
Yeah.
I mean, do you think that that's going to become part of the conversation in this next round of earnings, or in even the next couple of quarters? Do you think we can avoid that?
Look, I think it should be. And, one of the things that we saw were basket sizes were down, frequency of purchases were higher. So, again, who is the cannabis consumer?
It's everyone. It's quickly.
It's everyone. There's no question that it's primarily in cash. It's primarily. I mean, it definitely. There's a demographic that's probably a more stable and more frequent consumer.
Yeah.
They're probably more in the headwinds of some of the issues that are going on with auto loans, student loans. Credit card bills and disposable income that's evaporating. So I'm not going to tell you it won't be. And it was a big deal in terms of assessing the fundamentals company by company as we were about 15 months ago when some of those inflation headwinds were front and center. But let's be clear. We all recognize that the bigger part of this trade is more related to both the macro and then I think the execution by the companies.
Yes.
What assets, where, how well they're run, and who's really built up some brand power.
Yeah.
And I think those are, I mean, look, if we're talking about Coke and Pepsi, and we're talking about companies that also had a unique opportunity for the last 3 years to raise prices 15% a year. I mean, by the way, I don't drink Coke or Pepsi, but I mean, honestly, like, screw Starbucks. I like Starbucks, and my venti black coffee has gone from 3.25 to 4.25.
Right.
And at some point, like, I don't care whether, everyone's like, this is like your luxury, it's your $4 luxury. You're never going to stop spending on it. I mean, at some point,
You got to say when.
people are called BS.
Yeah.
Yeah.
And I think back to the cannabis consumer, I own a bar in the West Village in New York City, WXOU Radio Bar, if you ever want to go to a cool bar.
Early November, we're coming back to New York. We want to do a podcast there with you. Is that possible?
Yeah, right on, man. Let's
I
do
would
it.
love to do that.
And we may be opening up our second location. We may be opening that too. So
Nice.
But that bar is recession proof.
Yeah.
And it doesn't. We don't. The drinks don't cost a lot of money. They're not free, but they're not $20 martinis. And I kind of feel like that's how I think about cannabis here.
Yeah.
Cannabis' biggest issues are the illicit market, the cost of capital, the fact that it's an asset-heavy industry, which is just means that the margins are lower than they should be when people thought this through.
But what I'm gathering here in this conversation this fall is what you're saying is that there's some legs here, like there's something real here, is what I'm gathering. Is that?
Yeah, no, I think there are legs here. I think we're all gonna point out that it's not going to be a simple
I hear you.
trade hire. I mean, if we get follow through from the Senate Banking Committee, and we get the next round of follow through from the DEA, excuse me, I think the market's going to go higher. As we said, on valuation, at least on a sales multiple, it's still really cheap.
Yeah.
Do you think?
Go ahead.
Do you think that where do you think we ever get to on a sales multiple, or you think it's just too hard to tell right now? Because I mean, we talk to people all day long, and everyone's like, "Well, this company's undervalued. This company's undervalued," and it's like, really based on what? Like, yes, we can talk about they've got this this profitability potential moving forward, but it's like, at what point in time do you think the industry gets to trading at like a standard multiple? Against,
I think when not only taxation but also there's a greater understanding of what the costs of distribution are, and where the intrinsic margin is on each new unit of production. I mean, you have to get some standardization there, but I do think that, and people struggle with a little bit. Hey, like the top line's not really growing. And so is this really a growth industry? And I just, it's not growing at 30% a year, which we were seeing.
I mean, I think that's a valid argument. But then again, you look at someone like Trulieve, they've got Pennsylvania, Ohio, Florida that could all go adult use, and then they're gonna grow gangbusters.
Mm-hmm.
Yeah.
It's just like a phased approach, and unfortunately, like you said, we're at the mercy of Washington and the politicians to what's really going to bring the wind into the sails.
Yeah.
Yeah. I mean, I think the good and the bad news is that I used to say that emerging markets were, macro for dummies. Yeah. And when I started in EM, call it like 96, 97, it was like the next IMF tranche to Brazil was going to rally the whole thing.
Right.
And or, the currency, the central bank was in defending the currency, or they were raising interest rates, or this is where cannabis is.
Yeah.
And by the way, I say this all the time too, very similar between emerging markets and why I kind of got into this industry, because it really is a consumption story. It's a consumption growth story. It's a demographic story, where in emerging markets, a lot of these places, they went from not ever having a landline in their home to having a mobile phone, the same as you and me. There's a technology leapfrog. If you think about what's going to happen on the retail side of cannabis, it's the same thing.
Yeah.
Straight through e-commerce and digital and loyalty, and it's happening, right? So anyway, I still think, let's be clear, we're valuations are important. But the companies that trade expensive are probably the ones you want to own, not the ones you want to sell.
Correct.
And there's a reason for that.
Yeah.
So good momentum building, but tame expectations and what's happened over the past week. There's been a lot of euphoria, but at the same time, too, you got to look at this from a realist standpoint and be a little level-headed. So I hope, obviously, some of our viewers got some great feedback from Mr. Tim Seymour. Speaking of recession-proof, Is your man Aaron Rodgers going to be recession proof as the Jets kick off Monday or Sunday? Is it Sunday or Monday Night Football against the Bills?
The Jets are a football team.
Oh, you're
right?
a Giants fan. Sorry,
Yeah.
sorry.
Yeah.
Danny Dimes and Saquon will probably. I got my money on them.
Tim, you're not
Be the
going to like
better
me. I'm
team
a
in New York.
Cowboys fan. I got
boy.
the Cowboys in that game.
Yes, you do. And 12 out of the last 14 times, it was right to have them, or 13. So, I mean,
Not sold on Dak, but just love to
So-
see it. Football is back.
football's back. Football's back.
Tough year for your Mets, buddy. Tough year.
Tough year for my Mets. I mean, look, you're really going for it. That's fine. I think it's always about expectations,
Yeah.
and the expectations are extremely high in Jetville.
I bet.
And even to a point where I heard one of their guys like making a reference to their defense, looking like the '85 Bears.
Wow.
That's not
The '85 Bears that might be the greatest defense
That
ever.
is the great Anthony. I don't know if you were born yet, but that '85 Bears team was.
Yeah, it was. Because my '86 Giants were, I think, a better defense than the '85 Bears. But the '85 Bears had their own like Super Bowl shuffle, and they had the fridge, and they were
Those
like,
'86 Giants team. That was a good football team too.
Yeah, LT and Carl Banks, and I mean, it was. But anyway, the Jets, as a Giant fan,
Yeah.
I love it. I mean, let the Jets win win the Super Bowl in September.
I mean, the Jets have a good defense, but I don't think they're not even top 3. I mean, I'd put Philly, San Fran, and and Dallas over the Jets.
Look, let's put it this way:
Jets got a good defense.
If the Jets are playing Dallas, I'd like to see them kick their teeth in.
Yeah.
So I mean,
I'm not going to defend.
I'm not rooting against the Jets.
No.
My reaction when you asked the question is really, I think, the reaction of most Giant fans about the Jets. It's like, look, let them, good for them.
Yeah, I'm a Dolphin. I'm a Dolphin fan, so our expectations right now are
man.
sky
Dolphins.
high.
Yeah.
They're the only team to beat that '85 Bears team on Monday Night Football. Yeah. Otherwise, they should have been a 16-0 team that won the Super Bowl because there was no one even close to that team in that year. But I'm a diehard Cowboys fan. But
let's weave a football recap into our next podcast here, our next video here.
I definitely want to. I want to take you up on that offer. We talked to Anthony before, but we're in New York early November, and I'm like, we should reach out to Tim and see if we can somehow, some way. We already got a crew. We filmed with Rob, but if we take it over to your bar after work, once you get done, roll up the sleeves, and we just talk about anything in life. And I think that would be great.
I mean, that could be scary, folks. I hope the camera's not on. We're talking about anything in life. No, great. This was great. And, plenty to keep talking about. So let's circle back.
All right. Hope to see you in Chicago later this month.
Yeah, we'll do it.
All right. Thanks, Tim.
Thanks for your time, Tim.
Take care. What's up, everyone? So what'd you think of the interview? Are there any more questions you want us to ask that you want to learn more of? Then leave a comment below and let us know what you think. As usual, share this video with your network, smash that like button, and most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.